Based on the historical data and forecast, Bitcoin has experienced a significant downtrend recently, with a sharp decline from 89,100 to 62,200, followed by some recovery. The RSI consistently indicates oversold conditions, particularly between 15.1 and 33.8, suggesting potential for a rebound. The Bollinger Bands show that the price has been trading below the moving average, and the bottom band has been breached multiple times, confirming the bearish momentum. Considering this, I recommend a long position strategy targeting a potential reversal. We will enter a long position at $67,800, with a stop loss placed at $62,200, which is the support level. The initial target price will be $73,100, the previous resistance level. To refine this strategy, we will incorporate the RSI and Bollinger Band signals. If the RSI crosses above 30 while the price is near the bottom of the Bollinger Bands, it strengthens the buy signal. Therefore, if the forecast price reaches $67,800 and the RSI is above 30, and the price is near the bottom Bollinger Band, we will execute the trade. If the price reaches the target price of $73,100, we will take partial profits and move the stop loss to the moving average. This approach combines trend analysis, momentum indicators, and volatility bands for a more robust and adaptive investment strategy. Based on the historical data and forecast, Ethereum has experienced a significant downtrend from January 27, 2026, to February 9, 2026, with a recent bounce but overall bearish momentum. The RSI consistently dipped below 30, indicating oversold conditions, and has remained below 50, reinforcing the downtrend. The forecast for the next week projects continued downward pressure, with prices fluctuating around $2,000. Considering these factors, I recommend a short selling strategy, capitalizing on the prevailing bearish trend. Specifically, when the price reaches $2,030, initiate a short position with a stop loss at $2,070 and a target price of $1,970. This entry point is supported by the forecast data and the potential for a further decline. To refine the strategy, I will incorporate the Bollinger Bands. The price consistently trading near the lower band suggests continued downward momentum. If the price touches the upper Bollinger Band at $2,030, it might be a temporary bounce before resuming the downtrend. Therefore, the short selling strategy remains viable. The stop loss at $2,070 provides a buffer against a potential false breakout, while the target price of $1,970 allows for a reasonable profit while acknowledging the inherent volatility of the market. This combined RSI and Bollinger Bands approach offers a balanced risk-reward profile, aiming for high returns while managing potential losses effectively. Based on the historical data and forecast, BNB has experienced a significant downtrend, particularly from February 2, 2026, with a sharp decline. The RSI consistently dips below 30, indicating oversold conditions, reaching a low of 16.3 on February 9, 2026. The Bollinger Bands also confirm this trend, with the price consistently below the moving average and approaching the lower band. Considering this, I recommend a long position with an entry price of $592, anticipating a potential bounce from the oversold level and support price of $603. Place a stop-loss order at $591 to limit potential losses if the downtrend continues. A reasonable target price would be $655, aligning with the previous resistance level. To refine this strategy, we'll incorporate a layered approach. After the initial target of $655 is reached, consider a partial profit booking and setting a trailing stop-loss to capture further upside. The RSI suggests a potential reversal, but the overall trend remains bearish. The forecast data also shows a continued downward pressure, so caution is advised. If the price breaks below the $591 stop loss, immediately exit the position to prevent further losses. This layered approach balances the potential for high returns with risk management, crucial in volatile markets. Based on the historical data and forecast, Solana has shown a downtrend from January 27, 2026, to February 9, 2026. The RSI consistently remained below 50, with several days dipping below 30, indicating oversold conditions. The forecast for the next week suggests a continuation of this downward trend, with prices fluctuating between $80.7 and $88.5. Considering the oversold conditions and the bearish forecast, I recommend a short selling strategy. We will enter a short position at $88.5, placing a stop-loss order at $92.1, just above the recent resistance level. The initial target price will be $80.7, aligning with the lowest forecast price for the week. To refine this strategy, we'll incorporate the Bollinger Bands. The price has been trading below the middle band for most of the period, further supporting the downtrend. If the price touches the lower band of $73, we will adjust the target price to $77.6, near the support level. This combined strategy leverages both RSI and Bollinger Bands to maximize potential returns while managing risk. The overall portfolio will be 60% short Solana, 30% in cash, and 10% in other cryptocurrencies. This diversification strategy aims to mitigate risk and capitalize on potential opportunities in the broader market. Based on the historical data and forecast, TRON has shown a downtrend, consistently testing the support level of $0.279. The RSI has frequently dipped below 30, indicating oversold conditions, while the forecast suggests continued stability around $0.278. Considering these factors, I recommend a long position strategy when the RSI falls below 20, aiming to capitalize on potential rebounds. Specifically, enter a long position at $0.277. Place a stop-loss order at $0.268 to protect against further downside risk. Set a target price of $0.283, aligning with the recent resistance level. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the lower band and the RSI is below 20, it signals a strong potential for a reversal. Therefore, if the price reaches $0.278 and the RSI is below 20, enter a long position. The stop-loss remains at $0.268. The target price will be $0.283. This combined RSI and Bollinger Bands approach offers a more robust and efficient strategy, balancing the signals from both indicators to maximize potential returns while minimizing risk. Based on the historical data and forecast, Dogecoin shows a downtrend with increased volatility. The RSI consistently stays below 50, indicating a bearish momentum. The forecast data suggests a continuation of this downward trend, with prices fluctuating around $0.09 to $0.095. Considering the support price of $0.0877 and the recent price action, I recommend a short position. Entry price will be $0.0994, with a stop-loss set at $0.103, just above the recent high and the upper Bollinger Band. The target price is $0.0877, aligning with the established support level. To refine this strategy, we'll incorporate the Bollinger Bands. When the price touches the upper band, it signals potential shorting opportunities. The RSI nearing oversold levels, below 20, suggests a possible bounce, but in this case, the overall trend is bearish. Therefore, a short position initiated at $0.0994 with a stop-loss at $0.103 and a target of $0.0877 remains the most efficient approach. This strategy leverages the downtrend, utilizes Bollinger Bands for confirmation, and incorporates RSI for additional insight, aiming for a high return, albeit risky, investment. Based on the historical data and forecast, Bitcoin Cash has shown volatility with a general upward trend. The RSI readings have frequently dipped below 30, indicating oversold conditions, while the Bollinger Bands have widened, suggesting increased price fluctuations. The support price is consistently at $507, and the resistance is around $537. Considering the recent RSI levels and the forecast, I propose a strategy focusing on capitalizing on short-term dips and bounces. We will implement a buy strategy when the RSI falls below 30, targeting the resistance price of $537. Specifically, on February 9, 2026, the RSI was 27.5, indicating an oversold condition. Therefore, we will enter a long position at $526. The stop-loss will be set at $507, just below the support level, to mitigate potential losses. The initial target price will be $537, the resistance level. If the price reaches $537, we will move the stop loss to the entry price of $526 to protect profits. If the price continues to rise, we will set a second target price at $546 based on the forecast for February 16, 2026. This strategy combines RSI and Bollinger Bands analysis with support and resistance levels to maximize potential returns while minimizing risk. Based on the historical data and forecast, Cardano demonstrates a clear downtrend. The price has consistently moved below the center of the Bollinger Bands, and the RSI has frequently dipped below the oversold level of 30, indicating strong selling pressure. The forecast for the next week projects continued downward movement, with prices ranging from 0.276 to 0.258. Given this bearish outlook, I recommend a short selling strategy. Entry price should be $0.276, with a stop loss placed just above the upper Bollinger Band at $0.285 to protect against potential short-term reversals. The target price is set at $0.243, aligning with the established support level, which has acted as a consistent floor for the price. To refine this strategy, we'll incorporate the RSI. If the RSI rises above 40 during the trading week, consider tightening the stop loss to $0.271. If the RSI reaches 50, it signals a potential weakening of the downtrend, and the position should be closed, securing a partial profit. The Bollinger Bands also provide valuable insights. A sustained move below the lower Bollinger Band suggests further downside potential, reinforcing the short position. Therefore, the most efficient portfolio combines the short selling strategy with RSI and Bollinger Bands indicators for dynamic risk management and profit optimization. Based on the historical data and forecast, Chainlink shows a clear downtrend. The price has been consistently falling from $12.0 to $8.46. The RSI values have mostly been below 30, indicating oversold conditions. The price is currently near the support level of $7.84, and the forecast suggests a potential slight rebound, but overall maintaining a bearish momentum. We will implement a contrarian strategy, anticipating a bounce from the support level, but with tight risk management due to the prevailing downtrend. Therefore, I recommend a long position with an entry price of $8.39. Given the strong downtrend, we'll set a tight stop loss at $7.84, right below the support level. For the target price, we'll aim for $8.84, a modest gain reflecting the potential for a short-term bounce. This strategy combines RSI oversold signals, Bollinger Band's proximity to the lower band, and support level confluence. The position size should be adjusted based on individual risk tolerance, but a smaller position size is advised given the bearish outlook. Based on the historical data and forecast, Stellar is in a downtrend, with prices consistently declining over the past 2 weeks. The RSI consistently remained below 50, with several days dipping into oversold territory below 30, indicating potential for a short-term bounce. The Bollinger Bands show the price trading near the lower band, suggesting further downside potential. The support price is consistently at $0.146, and the resistance price is $0.171. Considering these factors, I recommend a contrarian strategy focusing on short-term gains. My strategy is to initiate a long position when the RSI reaches the oversold level of 20. Specifically, enter a long position at $0.146 when the RSI is 20.8 on February 9, 2026. Set a stop-loss order at $0.143, just below the bottom of the Bollinger Band to mitigate potential losses. The initial target price is $0.16, aligning with the recent resistance level and a potential bounce from the oversold condition. If the price reaches $0.16, consider moving the stop loss to break even at $0.146 to protect profits. If the price continues to rise, adjust the target price to $0.171, the resistance level, to maximize potential gains. This strategy aims to capitalize on short-term price fluctuations while managing risk through strategic stop-loss placement. Based on the historical data and forecast, DECRED exhibits a clear upward trend. The price has been consistently increasing, breaking through the resistance level of $33.5 and supported by a strong forecast for the coming week, predicting prices reaching $28.1. The RSI is trending above 50, indicating bullish momentum, and the Bollinger Bands are widening, suggesting increased volatility and potential for further price movement. Considering these factors, I recommend a long position strategy. We will enter a long position at $24.1. To manage risk, we will set a stop-loss order at $23.3, just below the support level. Our initial target price will be $26.2, aligning with the top of the Bollinger Bands and a reasonable profit target based on recent price action. To maximize potential returns, we will implement a trailing stop-loss strategy. Once the price reaches $26.2, we will move the stop-loss order to $24.7. If the price continues to rise, we will adjust the stop-loss order to maintain a protective buffer while capturing further gains. The ultimate target price will be $28.1, based on the forecast data. This portfolio combines RSI, Bollinger Bands, and support/resistance levels for a robust investment strategy with a clear entry price of $24.1, a stop-loss price of $23.3, and a target price of $28.1. Based on the historical data and forecast, Quant has shown a downtrend from January 27, 2026, to February 9, 2026, with a recent bounce. The RSI consistently dips below 50, indicating weakening momentum, and the recent reading of 29.8 on February 8, 2026, signals an oversold condition. The forecast suggests a slight upward movement in the short term, but the overall trend remains uncertain. Considering the support level at $66 and the current forecast, I recommend a long position with an entry price of $66.3. Set a stop-loss order at $64.8 to protect against a potential breakdown below the support level. A reasonable target price would be $69.9, capitalizing on the short-term upward forecast and the potential for a bounce from the support level. To refine this strategy, we will incorporate the Bollinger Bands. The price has been trading within the bands, recently approaching the lower band, which reinforces the oversold signal. If the price breaks above the upper Bollinger Band of $87.4, it could indicate a strong upward reversal, prompting a reassessment of the strategy. However, given the current forecast and the RSI readings, maintaining the long position with a $66.3 entry, $64.8 stop-loss, and $69.9 target price is the most efficient approach for now. This strategy combines RSI and Bollinger Band signals to maximize potential returns while managing risk effectively. Based on the historical data and forecast, World Liberty Financial has been in a significant downtrend. The price has consistently declined from $0.166 to a forecast of $0.0953. The RSI consistently remains below 30, indicating oversold conditions, and the forecast shows no signs of a reversal. Considering this, I recommend a short selling strategy. We will enter a short position at $0.112, placing a stop-loss at $0.117 to protect against a potential short-term bounce. The initial target price will be $0.0953, aligning with the most recent forecast. To refine the strategy, we will incorporate the Bollinger Bands. The price is consistently trading near the lower band, confirming the downtrend. As the RSI is already oversold, we will prioritize the price action relative to the Bollinger Bands. If the price touches the bottom Bollinger Band, we will tighten our stop-loss to $0.109. If the price reaches the target of $0.0953, we will consider taking partial profits and moving the stop-loss to break even to secure gains and potentially ride the trend further. This combined approach leverages both momentum and volatility indicators for a robust and adaptive trading strategy. Based on the historical data and forecast, Convex Finance shows a downtrend, but with recent signs of potential stabilization around the 1.85 support level. The RSI consistently dips below 50, indicating weakening momentum, and has been in oversold territory several times, most recently on February 9, 2026, at 34.5. The Bollinger Bands show the price fluctuating within a range, with the bottom band nearing $1.6 on February 9, 2026. Considering these factors, I recommend a long position strategy when the RSI reaches an oversold level of 20. Specifically, enter a long position at $1.74, with a stop loss set at $1.6 to limit potential losses. The initial target price is $1.95, based on the recent resistance level. To refine this strategy, I'll incorporate the Bollinger Bands. If the price approaches the bottom band while the RSI is oversold, it strengthens the buy signal. For the forecast period, if the price breaks above the upper band of $2.34, it suggests a potential upward breakout, and we can adjust the target price to $2.03. However, if the price stays below the middle band, it reinforces the downtrend, and we should maintain the stop loss at $1.6. Therefore, the portfolio will consist of a long position at $1.74 with a stop loss at $1.6 and a target price of $1.95, with adjustments based on Bollinger Band signals during the forecast period. Based on the historical data and forecast, Lombard exhibits a strengthening upward trend. The recent RSI values have been fluctuating but generally trending upwards, indicating increasing buying pressure. The forecast prices for the next week also suggest a continued upward trajectory, with prices consistently above $0.78. Considering the support price of $0.82 and the resistance price of $0.932, the price is likely to stay between these levels. We will implement a strategy combining RSI and Bollinger Bands to capitalize on this trend. We will initiate a long position when the RSI falls below 30, indicating an oversold condition, and the price touches the lower band of the Bollinger Bands. For example, on January 31, 2026, the RSI was 27.9 and the price was $0.625. We will enter the position at $0.625 with a stop loss placed just below the lower Bollinger Band at $0.61. The initial target price will be the resistance level of $0.932, aiming for a significant profit. As the price moves upwards, we will adjust the stop loss to protect profits. If the price reaches $0.85, we will move the stop loss to $0.83. If the price reaches $0.90, we will move the stop loss to $0.88. We will take partial profits at $0.8 and $0.9, securing gains while allowing the remaining position to run for further potential upside. This strategy combines the momentum indication of RSI with the volatility assessment of Bollinger Bands, maximizing potential returns while managing risk. Based on the historical data and forecast, LayerZero shows a generally upward trend with significant volatility. The price has been fluctuating around the $1.8 mark, testing the support level of $1.7 multiple times. The RSI indicates periods of both overbought and oversold conditions, with recent readings suggesting a potential for a bounce. The Bollinger Bands show the price has been testing the lower band, which, combined with the oversold RSI readings, suggests a potential buying opportunity. Therefore, I recommend a long position entry at $1.77. To manage risk, place a stop-loss order at $1.67, below the recent support level. The initial target price should be $1.96, aligning with the forecast price for February 16, 2026. To refine the strategy, I will incorporate the Bollinger Bands and RSI signals. If the price touches the bottom of the Bollinger Bands and the RSI falls below 30, consider a long position. If the price reaches the top of the Bollinger Bands and the RSI exceeds 70, consider a short position. For the long position, enter at $1.77, set a stop loss at $1.67, and target $1.96. If the price breaks through the $1.96 resistance, adjust the target price to $2.09. This blended strategy combines trend analysis, volatility indicators, and price action to maximize potential returns while minimizing risk. Based on the historical data and forecast, ZKsync has been exhibiting volatility with periods of both upward and downward trends. The RSI fluctuating between 26.3 and 52.4 indicates that the asset has moved between oversold and overbought conditions. The Bollinger Bands show that the price has occasionally touched both the upper and lower bands, suggesting periods of high and low volatility. Considering the recent downtrend and the forecast predicting a continuation of this trend, with prices ranging from $0.0219 to $0.0206, a short position is warranted. Therefore, I recommend entering a short position at $0.0219. Given the support level at $0.0204, a stop loss should be placed slightly above this level at $0.0215 to protect against unexpected upward movements. The target price for this short position should be set at $0.0206, aligning with the forecast price. This strategy combines technical indicators and price forecasts to maximize potential returns while managing risk effectively. The portfolio will be 60% short position, 20% long position, and 20% cash. Based on the historical data and forecast, basic attention has been in a downtrend, consistently testing the support price of $0.108. The RSI consistently dipped below 30, indicating oversold conditions, and recently reached as low as 19.9, suggesting a potential for a bounce. The Bollinger Bands have been widening, reflecting increased volatility. The forecast for the next week predicts a continued downward trend, with prices hovering around $0.11. Given these conditions, I recommend a contrarian strategy focusing on short-term rebounds. My strategy involves a long position when the RSI reaches an oversold level below 20. Specifically, enter a long position at $0.11. Place a stop-loss order just below the support level at $0.107 to limit potential losses. Set a target price at the center of the Bollinger Bands, which is currently around $0.147. This strategy aims to capitalize on short-term bounces from oversold conditions while mitigating risk with a clearly defined stop-loss. If the price fails to reach the target and starts to decline, the stop-loss will be triggered, protecting the investment. Based on the historical data and forecast, Kite shows a clear uptrend. The RSI consistently exceeded 70 for most of the period, indicating strong bullish momentum. The forecast data predicts further price increases, reaching $0.212. Considering the current RSI of 74.3 and the forecast, I recommend a long position. We will enter a long position at $0.171. To manage risk, the stop loss will be set at $0.163, just below the recent low and the lower Bollinger Band. The initial target price will be $0.195, aligning with the forecast peak and a reasonable profit margin. To refine the strategy, we'll incorporate the Bollinger Bands. If the price breaks above the upper Bollinger Band, we will adjust the target price to $0.212, capitalizing on the projected upward momentum. Conversely, if the price approaches the lower Bollinger Band and the RSI falls below 30, we will exit the position to avoid potential losses. This dynamic approach, combined with the RSI and forecast data, should yield high returns while effectively managing risk. The final portfolio will be a long position with an entry price of $0.171, a stop loss of $0.163, and an initial target price of $0.195, with a potential adjustment to $0.212 based on Bollinger Band signals. Based on the historical data and forecast, Axie Infinity has been in a downtrend, consistently testing the support price of $1. The RSI consistently dips below 60, indicating oversold conditions, and the forecast predicts continued price declines, although with some stabilization. The Bollinger Bands show increasing volatility, with the lower band consistently approaching the support level. I recommend a contrarian strategy focusing on short-term bounces off the support. We will initiate a long position at $1.5, placing a stop-loss order at $1 to mitigate potential losses if the downtrend continues. The target price will be $1.6, aiming to capitalize on a short-term rebound. To refine this strategy, we'll incorporate the Bollinger Bands. If the price touches the lower band, confirming an oversold condition, we'll enter a long position at $1.5. The stop-loss remains at $1. However, if the price breaks below the lower band, indicating a stronger downtrend, we will avoid the trade. If the price approaches the upper band, we will take profit at $1.6. This combined RSI and Bollinger Bands approach provides a more robust framework for navigating the current market conditions, balancing potential gains with risk mitigation.